Hey guys, Mike here. So, oh boy, what a day in the market, right? Or not, I guess, because it really didn't move that much. But I'll show you a couple things that surprised me. And there was a couple stocks like Tesla, right, ramping up, moving hard. I'll show you exactly why, and also why the SPY could have room to run tomorrow. It won't surprise me. I'll show you a few things on that. But I'll tell you the kind of market we're in. I don't know if you just sit back sometimes going, interesting. See some of these stocks that are moving up, and I want you to look at this right here. Look at the moves year to date here, right? 43%. Wow. 52%. 19%. 32%. And now let me click on these and show you what beauties these are that are moving up. First one, Peloton. Oh yeah, that's a heck of a run company there. 43% move. Carvana. I can't believe it's still in business. 52%. GameStop. 20%. It's got a big following. That one doesn't surprise me. Upstart, buy now, pay later, I believe is what they do. I guess people are paying later or we're just front running it. 32%, right? And we can't forget crypto because it is still running hard. And there's plenty of other names out there I can tell you that are running hard right now that were left for dead. And so let me know what you think in the comments about that. But that's one thing that's got a lot of people going, really? Like that's where we're at right now? This is the new bull market, or is this 2020 all over again? I mean, doesn't it kind of feel that way? But you had one of the banks come out too, Goldman Sachs. Oh my goodness. I mean, if you're gonna miss, I always say, do it right and miss big. I mean, look at this right here. Look at this EPS miss. 332, missing expectations of 577, missed revenue as well. And I mean, this is what their earnings look like. It was like, oh boy. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And one of the things that really shocked me today was, if you looked at the market all day, was this channel we were in. Like, I was really surprised because I put out this morning, I was like, Max Payne's at 394, but the SPY today is open around 398. There's a lot of puts expiring 388 and 393 and calls at 400. So the optimal range, and I put this out right before open, would be between 395 to 400, right? And of course, the reason why I got that is I just looked at this right here and I said, okay, there's the puts. Here's the calls. But I said, man, that's a really, really tight range is what I put in the morning news brief. So I was kind of surprised. But then on top of that, I was like, okay, yesterday or late last night, because again, I have no life, I put in here, watch these levels tomorrow. Large support formation at 396.97. It's around 397 with $1 billion in dark pool prints. And then, of course, there's $462 million of dark pool prints at 398.55, right above the close on Friday. And what's crazy, look at this right here. This is that range right there. This is the dark pool prints. And this is what I'm saying. A lot of times they act like magnets. And they also add this support and resistance. You can see at 11:14 on, where do we stay? Right there between those two prints. And this is what I'm talking about when I talk about the game within the game and all that. This is one of those things that they use, the market makers, to manipulate the market and steer it in directions they want to steer it in. But a lot of people have access to this now, right? So this is why this stuff, to me, access, support, and resistance, and like a magnet to the market, because so many people have access to this now that we just didn't have access to before. To understand, most people didn't know what market makers were probably before 2020. I bet you 99% of the country didn't know. And so now all of a sudden, because I'm putting out videos on it, other people put videos on it and educating people and say, hey, this is what's going on. So you can use this stuff. It doesn't always work, but as you can see right there, it worked perfectly. And I show you many other examples where it does work perfectly. And I was saying in the beginning, don't be surprised if this rally were to continue, right? I mean, obviously we were a little red today, but basically trading that channel is what we did, because things are setting up to actually continue right now. While I won't be surprised, and again, it's tough because there is this. The bears are going to be fighting like crazy to keep pushing this down, to keep it within that channel, right? They don't want it to break out. Because if it breaks out, it can go back to what we're looking at, like April highs or something like that, I believe it is. But the reason why it's setting up to be good is when you look at this right here, there you can see it breaks above, obviously it's above the 200, which is bullish, but also above that volume PLC. So now all of a sudden you got this volume gap, right? A lot less resistance ahead. And for example, to show you what I'm talking about, look at Tesla. I put this in the Discord last night. I said, watch out for Tesla, because once it gets above that volume POC around 124, 125, it can go. And what happened? It went to the 130s, right? Pretty quickly. And you can see once it got past it, let me put this on like the 5 minute or something. Once it got past it, it just took off, right? And then of course, what happened when it started getting up against more resistance, it started trading sideways. And so that's how it works. You get in those gaps, and I've just seen stocks, they just fly, right? And so there's a lot less sellers and stuff in there. And, another reason to look at too, look at tomorrow. These are the options expiring tomorrow. I showed you what happened today with the options, right? 398 are calls and puts. Well, we're right below that. Look what happens after that. I see fewer large spikes on the calls than I do on the puts. And so right now we're right below 398. So they're going to try to keep us below that. But if we break above it, they're better off just letting it go versus trying to push it back down to where you see a lot more puts. And then, of course, what's another reason? Short sellers. Short sellers have covered more at the start of this year than they have since, guess when? March of 2020. And what happened in March 2020? The bottom happened, right? We started going this major epic run after that. And so that's something to keep an eye on as well, because I know people are short the market right now and they're getting crushed. And then you guys right here, financial conditions. I've talked about it before. What's happening? It's loosening, right? This is when markets go up. When these financial conditions loosen, they go up. It happened here. You saw a pop in the market. Anytime you see financial conditions loosening and not tightening like it's supposed to be, the market is going to absolutely go up most of the time. And then if we look here, this is where you see this huge percentage of people that are underweight on equities, right? And so you can see down at the bottom, we haven't seen a number like this until you go all the way back to the 08 bear market. And so people are very underweight. So still a lot of money sitting out there that can come in on this market right now. And that's usually what you see in bear markets. And again, look, have we ever got out of a bear market when we're setting a Fed funds rate of 5%? Nope, never happened before. Never happened. And so, but then again, what is this? Year first, right? There's just a lot of push going on right now. Not saying I agree with it or don't agree with it. I'm just saying if you look at data, you see the breaths are big time, right? They're going up there right now. We're consolidating, but it seems the bears can't push it down. In order to push this market down, a lot of people got to sell, right? They have to sell. So who's willing to sell? Are you selling? You know anybody selling? Right? And so, again, this is a time for me, what I think is a time to be like just going all in. It's like, no, not with the VIX sitting at almost 18, sitting there right up against this major resistance line. I'm a patient man. And I pride myself on that. I'm very patient. I made purchases along the way here or there, and some of them are up, some of them are down. But, yeah, I'm not going to sit there and push all the chips in right now. I'm more than willing to wait a little while to confirm that this is actually happening, right? And if you remember, I showed you a chart a while back, and I said if you zoom out and you look at that channel we were in since 2010, we're still in the freaking channel. That's all we did. We just fell back in the channel. We had to burst the bubble. We fell back down in the channel. So I don't know why people are talking about the new bull market. No, we're just basically falling back in the channel. That was the old bull market and taking off. We just had this huge balloon, right, of liquidity that just got popped, and so that's coming down. But again, also here we are in earnings. We're just starting earnings, right? Goldman was a disaster, but there's others that are beating expectations. We just got to hear what the forecast is going to be, and we could easily see. And this is why I showed you that chart about that I really like, where it breaks down bear markets and bull markets. But the one chart shows you all those bull market runs, like 12, 20% or more within the bear market, right? And in the dot-com bubble, we had like 3 that we ran up, and then of course end up continuing to go down. The difference in them and this one is the fact is crypto had its capitulation. We've never had a capitulation so far in the stock market, though, because we didn't have a Lehman Brothers moment, right? We didn't have a major company go bankrupt, right? Nothing has just really sent stocks just skyrocketing down and everybody running for the hills. Could that happen? It would have to be, to me, some kind of like liquidity crisis, some kind of credit or debt market issue. I can see that. I mean, let me know in the comments what you think. But we haven't had that, right? Crypto had it. It definitely did with everybody going bankrupt. Is it over? Who knows? We'll have to see. All right, we'll see how the miners doing, things like that, certain things. But that's the thing that's missing from this bear market. And again, just being right back in that channel. To me, I don't know. I'm a patient guy. Let me know. A lot of people they'll rush in, and they rushed in April, or they rushed in June, they rushed in, they keep rushing in. Just be patient. That's what you can do, or just start buying in. I mean, like I said, if you made it this far, pat yourself on the back. If you were patient enough to wait from like January to October, especially, and just pat yourself on the back because you're getting some pretty dang good discounts. Right? I mean, I'm definitely not buying any of those stocks I showed you at the beginning. That ain't going to happen. Give me a break. Now, I need to make sure that the company's going to be solvent, for crying out loud. But either way, you start DCAing in now. If the market goes back down, could it test the lows of October? Sure it could. Could tech get beaten up some more? Absolutely. But again, what's strong right now? Apple still strong, right? And Tesla's made quite a comeback, as you can see. But the big boys like Apple and Microsoft still holding in there. Now, if you're shorting the market, that's a whole different ball game. Obviously, I can see why you're stressed out. I mean, it makes you feel better. I know people have been shorting Bitcoin since 18K. They've been shorting semiconductors, buying SOXS, I believe it is, since like $3 or $4 back. And I don't short the market outright like that. I bought some puts here or there, but right now the trend on the short term is up. And so you're definitely going against the trend, so hopefully it works out for you. But right now, I'm sure you got to feel the FOMO, right? I mean, people on the elevator talking about it. The memes are coming back. Everybody's talking about how BTC is going to 50K in 3 weeks. All this crazy talk. I honestly feel like we're in 2020 for a moment. I'm having flashbacks of 2020. Let me know in the comments if you feel that way. But I mean, valuations, all that stuff is out the window at this point in time, right? This is, and we'll see, because next week we really get more of a big feel on earnings. This week's, okay. We'll see how many end up missing top and bottom line, but a lot of people are just going to pay attention to Netflix, a couple others, but I don't know. Let me know in the comments what you think. So anyway, tomorrow I'm going to come up with some data, unless we have some crazy news come out, that'll show you, to me, what the biggest threat to the U.S. economy is, because China just has some data come out, and it's the biggest threat to their economy as well, but they're not the only one with the problem. We got the same kind of problem, and just in a different way. And so I'm going to show that to you, and this will affect our generation, all the future generations, especially like my son's generation. I think they're up a creek. But anyway, hope you guys have a good one. Hit the like, subscribe button if you got anything out of it, and I'll see you tomorrow.